today. TFNN, educating investors. The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. And you got markets right now kicking things off with the S&Ps up by 3 points. We check out a little bit of volatility coming into the opening bell right now. 7 a.m. in the morning, we're trading at 38.10. You charge higher by about 30 points in the S&P. Right now, you're basically coming in flat to where we were on the close last night. Quite a day to the downside yesterday. NASDAQ 100, we're negative by 2 points, trading at 11,671. You talk about a pullback, man. You're talking about 500 points from where we open, that initial thrust higher. You trade lower. We'll jump around to some of the FANG stocks in a moment. Man, we had some huge action to the downside in some of those FANG stocks. I think Amazon was down 5%. Yesterday alone, remarkable. Dow right now up by 72 points, but man, the Dow gives up about 1,000 points. 31,867, and let's see what the low was overnight. 30,861. More than 1,000 points from where we were at the open yesterday to the overnight low. Right now, you're positive by 72 points. The Russell is flat. Bitcoin chopping around at 20,000 right now. You're negative barely on the session. Bitcoin flirting with some dicey territory. And how about crude? It don't stop, man. Crude to the upside. 113.95 crude just hit. We're trading right now at 113.24. You back things up for crude. So much for that pullback, folks. And keep these Fibonacci levels on your charts, folks. It bounces right off the 382. We got slightly below that level. We got to a 101 handle last week. But boy, we're bumping up to whether it was the highs of March, those highs in March, 116.64. You're also bumping up against the price level we had towards the middle of May, that high, 115.56. So 115, 116 or so. Maybe that's the next area for crude. Trading right now 113.20. And we jump to gold. Gold catching a little bit of a bid. We're back to a short-term time frame. You got gold charging higher. We're up about $12 on the session at $18.32, and we jump to notes and bonds. We got a little bit of higher price and lower yield for a little bit of a reprieve. And right as we come on the air, you got Chairman Powell speaking at an ECB conference or something going on. I think Lagarde is out there as well. So we may get some headlines, man, as we kick things off this morning with Chairman Powell out there after quite the day we had yesterday. And you back things up to the S&P, man, 39.50. Even the close of yesterday, not even cherry picking the low of action. The low yesterday, we basically closed at session lows. You're talking about 130. 130, more than a 3% drop from the 39.50 price point that we had at the open yesterday. And overnight, you made a low of about 38.12. So you're talking about 138 points, folks, in an index where 39.5 points would be 1%. What is that, 3.5% on the index just yesterday alone? Volatility, nowhere near gone just yet. You jump over to the VIX, 28.78. We spike at about 28.50. We were at 26.47 to start the day yesterday. The VIX, not very comfortable going back below anything, below 24, 25, something like that. And then April, you got April 5th, we were at 18.20. For some context on where we were in the market on April 5th, you kidding me? 4,600? Is that true? Yeah. So those lows, when we still had the VIX at 18, you had the 4,600 on the S&P. Remarkable. And right now we're trading at 38.28 on that index. All right, let's jump around to some of the headlines we got going on. We'll kick things off. Let's kick it off with a little bit of earnings, man. Bed Bath & Beyond. I was talking to my friends about this in the morning, man. One of them was listening to the actual earnings call last night, and they're in big trouble, as if we didn't know that already. Sharply missed Wall Street's expectations for quarterly revenue and earnings. Getting into the numbers, Loss per share, 283 versus 139. Revenue, they miss as well, 1.46 billion versus 1.51. The net loss, $358 million or $4.49 a share from just $51 million a year earlier. On an adjusted basis, $2.83 a share. Market was looking for $1.39. Same-store sales, ready for this one? Declined 24% in the quarter compared to a year ago. Market was looking for a 20% drop, and they did worse than that. Online sales falling by 21% year over year. I mean, it's just, I'm going through it, folks, because this company might be on its way to BK. This might have been the quarter that did it. The figures include a 27% drop for its Bed Bath & Beyond banner and a mid-single-digit decline for the Bye Bye Baby banner. Yeah, they're in big trouble, folks. They said the board committee is looking into ways to maximize the value of its baby chain. They've been talking about potentially spinning off Bye Bye Baby. Bed Bath & Beyond is the one that is really, really hemorrhaging in a big way. Inventory in the quarter, rising 15% from a year ago. That's a common theme that we've been seeing. Yeah, it was carnage all around, folks, on this one. And we check out the chart of Bed Bath & Beyond. BBBY is their symbol, as if it's already not been bad enough. And you really just drop out of bed, even with the price being $6.50 coming into that earnings. You're going to lose, what, a whole dollar? You're going to be down, what is that? 15% on the open this morning at 547, and be careful. Yeah, after their earnings call, bloodbath and beyond. It was just it was all negative action in a big way, folks. You can't overstate when you got numbers like down 24% same store sales, online sales down 21% year over year. They're losing $358 million versus just $51 million a year earlier, and they're not making up the revenue. Not just a story of missing on earnings. They're not making up on revenue. Same store sales declining. Yeah, I guess they're going to get a new chief merchandising officer. That falls somewhere in the middle of all of that bad data. They said it expects same-store sales to recover in the second half of the fiscal year, but did not provide a specific forecast. Take that for what it's worth when they tell you that everything's going to be okay, and they don't tell you the numbers that mean that everything's going to be okay, because they don't know the numbers, folks, at all. That's an optimistic hope. And if you've ever heard the phrase, if your plan involves hope, it's not much of a plan at all, folks, if you're just hoping for something to happen. And I think that's what's happening at Bed Bath & Beyond at this point. Let's jump around to some of the FANG stocks, man. Yesterday, Amazon, you dropped from 114 to 107, man. Pre-split, you'd be talking about, what, $140 move to the downside on Amazon. Pre-split, you're talking about just from where you were on Monday's open, what, a $200 move to the downside. You got to talk about it a bit, because we used to be trading at $2,000. So we're trading right now at 107. Amazon basically flat on the session. You jump over to Apple. Apple shares. Apple trades yesterday from 143 to almost 137. Folks, that's a $6 move on Apple. Apple has about 16.5 billion shares outstanding. Apple alone, Apple shareholders alone, it's the biggest company in the world, but just yesterday alone, Apple shareholders, market cap of that company losing $100 billion with a B in one day. Jumped to Microsoft shares yesterday. Microsoft trades from 265 to 255 almost. Stay tuned, folks. When we come back, talking to our man Kevin Hincks from TD Ameritrade Network, Fast Market. We'll be right back.
In a time of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve in a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps right now. You're positive by 5 points, trading at 38.31. You got all the markets barely in the green right now. NASDAQ 100 positive by 1 point, and the Dow Jones positive by 93. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, right here on Tiger TV. Fast Market with your host, Kevin Hincks and Tom White. They break down the day's market action. And boy, Kevin, we talked to you yesterday, man, but we had a fast market after we hung up at 9:30. Good morning.
Yeah, things got a little interesting yesterday. And, Tommy, frankly, they've already been interesting this morning. There's a lot going on. We haven't even opened yet, and there's a lot going on this morning. So, about 7 o'clock this morning, we got 7 o'clock Chicago time, 8 o'clock Eastern. We got German CPI that gave futures a lift. I think that's what's giving them a lift again this morning. Then we got our GDP data that was kind of a shocking number in terms of how weak it was. It's the third look, Tommy, at first quarter GDP. We get one a month and they make adjustments. Down 1.6%, and personal consumption expenditures almost half of what they were, from 3.1 to 1.8. Now, what might be the biggest headline is going on right now, Tommy. Jerome Powell is speaking in Portugal on a panel with Christine Lagarde. So the market is rallying as we speak here, Tommy. Not surprised if they're probably making some headlines from Portugal right now as we speak, Tommy.
Yeah, we got some stiff competition this morning with the chairman out there at an ECB forum. I'm sure we'll see some headlines, man, especially after the day we had yesterday. Hey, how about Nike, right? We were checking about Nike. You guys had a trade on looking for some volatility. Yep. When we talked yesterday, this thing was spiking higher, and everything turned lower yesterday, man. Nothing against Nike. Amazon was down like 5%. But Nike spiked to 114 from the open of 108 and finished the day, Kevin, under 103. What'd you think of that action, man? Whew.
Yeah, big. I mean, they came out and warned about, all the normal problems that companies are having. But, yeah, the original numbers were pretty positive out of Nike, but, they couldn't stay away from. Remember, they're in the Dow Industrial Average, so they couldn't stay away from a market sell-off. And the overall event that happened probably added to some of that. Wouldn't be surprised if Nike came back here slightly, but yeah, that was a pretty big down day in Nike.
Can you talk a little bit, Kevin, about, so options trade only during market hours, right? 9:30 till 4. So often we get an event like we have with Nike, an earnings event, and maybe you get one way of movement action. But so often, man, when we get that opening bell, we really find out where supply equals demand. It might take a few minutes to sort out like Nike did yesterday, spiking higher initially. But it's pretty interesting sometimes, Kevin, the overnight action, especially when you're dealing with something like an earnings event where you have a specific set of data, it hits the market, you have some guidance to go along with it, you have an overnight market that is very thin, that takes the stock one way, and then we really find out what happens during the trading day. What do you do when you approach that as an options trader, especially where you can't trade outside of market hours and you kind of wait for that opening bell to see how it reacts? What's your take on how, generally, because as an options trader, man, it's pretty remarkable sometimes the move we get overnight and then the market opens and you really find out where supply equals demand.
Yeah, it's important that your viewers know that after hours and right after the event comes out and overnight, remember, you're talking about a move on a fraction of the daily value. And a lot of people, a lion's share of the people that may want to trade can't during those hours or have very limited access to trading. So that's not the true indication. After hours, things like that, that's not a true indication of where the most volume is trading. So always be careful. Always be skeptical of those moves pre-market and post-market, because that's not where the majority, remember, it's not where the majority of the order flow is trading, number one. And number two, you have an overall market that's trading as well. Like Nike probably wouldn't have traded where it was if the market didn't sell off as much as it did. So there's a lot of factors that go into trading during a day, and that pre-market or overnight trade, boy, that doesn't get a lot of, I see it, I pay attention to it, but I want to see what's trading when the real volume shows up, Tommy, and that's during normal trading hours.
I agree, man, especially when you get that type of action like Nike. You got to move upward originally on their numbers, then you got to move downward on the guidance, right? And then you have a market that's sitting pretty healthy yesterday, with the price level approaching 4,000, 39.50, I think was the print we got on the open of the thrust upward. And yeah, it carried everything lower. We come into today, Kevin, you talked about it, Chairman Powell, all eyes on him right now over at the ECB Forum in Portugal. We do have some companies coming out with their numbers. Bed Bath & Beyond, man, that was as they're calling it in the Tiger's Den, a bloodbath and beyond with their earnings last night, trading lower dramatically. But we still got some companies trickling out today, some companies tomorrow as well. What are you guys talking about on the program coming up at 12 today, Kevin?
Yeah, well, if you listen to yesterday's show, what I referred to Bed Bath & Beyond as this is the long goodbye in Bed Bath & Beyond, because they just seem to be easing towards extinction. I don't know if that's true, but that's the way it
might have gotten shortened last night, man, with all of that data. Yes, for sure. I was listening. It's remarkable, man.
But today we've got Constellation Brands, the alcohol company, that's always one good one to look at. We've got Walgreens Boots Alliance coming out with earnings before the open tomorrow morning, Tommy. We're finalizing the names right now, but that will surely be two of them for sure, Tom.
Constellation, man, they have just been overachieving compared to this market in a big way. When you look at where they are, they're only off a recent all-time high of 261, trading at 245. Many companies far off their highs off of there. And calendar year, what'd you kick off the year at? About 249. You're trading at 245, and just yesterday alone, you were above 250 for Constellation. They have quite a position in canopy growth. The cannabis sector, though, can't get much worse with those equities. Always interesting. Well, Kevin, we appreciate you taking the time with us every day, man. We appreciate the show at 12, and we'll be watching today.
Have a great day, Tommy. Thanks for having me on.
Always a pleasure, man. Folks, tune in. You heard it. They'll be talking a little bit of Constellation Brands over there. And I imagine we have another day of volatility coming at us with the Fed chairman speaking right now as we come into the opening bell. And coming off the heels of the volatility we had yesterday, folks, doesn't usually calm the market that much. As in, you got to pull back yesterday. All we are is back into the trading day that we had from Friday, okay? And we've almost given it all back. I mean, you check out the action, you put it on a 15-day, 5-minute, right? Friday's action, we opened Friday right where we are right now, folks, okay? And Friday had quite the finish to the upper territory. When I was talking to Kevin yesterday on Tuesday, we were talking about Monday's follow-through and how it was kind of nice to see the follow-through on Monday, because rightfully so, okay, the days that we've seen those huge upward thrusts, we've given it back pretty quickly. Well, what did we do this time, folks? We held it on Monday, and we gave it back on Tuesday. The chairman of the Federal Reserve is speaking today. We'll see if he has anything to say. And right now, you're looking at a 10-year yield of about 3.17%, the yield on the 10-year. Pretty healthy, still considering all things. We got the NASDAQ 100 rolling over a little bit red. We're going to come back, folks. We got the opening bell in 3.5 minutes. We got the chairman of the Federal Reserve speaking. We'll talk a little bit of Fed out there. We'll talk a little bit about earnings. We'll talk a little bit about Carnival Cruises as well. Carnival. CCCL? No, it's CCL. Trading lower. Check out that chart. The pain may not be over for Carnival as they get a downgrade. Stay tuned, folks. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open right now, and we got the S&Ps. You're up 4 points on the opening bell at 38.29. We got the NASDAQ 100 opens barely in the red right now. The Dow up 85 and the Russell flat. We jump to commodities right now. They're talking about gold in the Tiger's Den. We got crude, 113.31. We got the gold contract right now at 18.31, up $10 on the session. We jump to notes and bonds, sputtering around with a yield of about 3.17%. Okay, jumping to Carnival. Let me get this up. So Carnival, let's get the exact note on what they're talking about here. Let me find this article because which bank is talking about it here? That's not the one. Oh, shame on me. Where am I here? It's going to be right here. Hold on. Okay. Morgan Stanley. I want to get the exact verbiage and what they're talking about here, because this is an important heads up, folks. You think you're going to catch a falling knife on Carnival? Be careful, man. I mean, look at this, too. Maybe that's the deal. You break out of the downtrend channel to the downside. An ode to our man Bud Rolfs, the channel master. He used to be a host and a newsletter writer at TFNN many years ago, folks, and he was the channel king. And what he would always say is you don't want to trade a stock when it breaks out of the channel, okay? We'll use Carnival as an example. You have Carnival, breaks out of the downtrend channel, okay? Now, you can argue where you put these lines. Maybe you put it a little bit lower. Maybe it tilts a little this way. Nonetheless, you gap lower out of this channel from where you were the week of June 6th to June 13th. This is a weekly. You come back and you test that channel line, and then you trade lower, and that's the short. You want to see it test that channel line. In the same way, if you were breaking out of a channel line to the upside, you let it break out of the channel line, you let it come back and test that channel line, and then that's where the buy is. Well, guess what? That's might be where the sell is. You got Carnival down 9.1%. Now, what Morgan Stanley's talking about here is the debt load, okay? And guess where they say the price could go? Take a guess. $0, folks, okay? Morgan Stanley said the price could potentially go to zero in the face of another demand shock given their debt levels. They can't handle any more, right? Well, that's not a good spot to be in, folks. I mean, what are we talking about worth a market cap right now? Talking about a company valued at $11 billion that could go to zero. I mean, think where this company is, folks. You were at the doldrums of $7.80. It's basically at COVID lows, which is remarkable when you think about how well this economy has come out of COVID, all right? COVID got political. It becomes this big problem with people saying it's over, it's not over. Folks, it's always going to be somewhere. The truth lies somewhere in between, okay? Yes, it's nothing like what it was during the pandemic. Is it over completely where people are not dying? No, it's not, unfortunately. But Carnival should not be trading at prices of the COVID lows where we literally had no idea how this was going to go. We had no idea, unfortunately, how many people were going to die, how bad this was going to be, if we'd ever have vaccines that could save lives. We had none of that. And you're back to that price level. And Morgan Stanley's saying, hey, they cut the price target to $7 from $13, and they said that it could go to zero if they face another demand shock. I don't know how that demand shock could come in, folks, but we're facing some pretty real threats of a recession in the economy. Are people going to be cruising? This is where things get so difficult because in any other universe, right, maybe some of those expenditures would be curtailed if we have a recession and a pullback and job losses, right? Maybe people taking less vacations, less cruises than usual. But we're coming out of a pandemic, so maybe that's the area that holds steady. Nothing wrong with trading this equity if you want to. But be aware that it can go to zero. And you better believe, folks, that it could be a quick trip to zero, too. Because if anything ever happens that they start seeing the tide tip, okay, where maybe they just don't have the revenue to keep up with their debt, this thing could be a quick slide to negative prices on the hint that maybe they'd be better off declaring bankruptcy and coming out of it, which is completely real when you talk about the level of debt they have. Now, you have the other cruise ships trading lower as well on that news. Let's see, Royal Caribbean, RCL, they're down 6%. Now, Royal Caribbean was down to $19 at the COVID lows. You're trading at $37, off of what, $80 plus earlier this year. And Norwegian, NCLH, they're almost at the COVID lows as well. You're down 6.2% for them. So be careful, though, folks. Let's jump around to some of the other travel stocks. We'll start it off. Boeing, not necessarily travel, airline, but they're down 1%. Market's turning south right now, folks. You jump over to the airlines. American down 3.2% right now. Delta down 2.8% right now. United down 3.2% right now. We jump domestically. JetBlue down 1.6%. Going to be careful. Interesting to see how the whole saga plays out with JetBlue, with Spirit. I saw one headline out there for them today. That's going to be an interesting one as well. Southwest, JetBlue, Spirit, all of them. All right, let's jump around to some of the stocks that have their numbers still. We got General Mills out with their numbers. GIS is their symbol. They're trading up 3.5%. You talk about a strong stock, man, especially in the market we're in. They're pushing recent highs of $73.99. You're up to $72.33. They beat earnings, $1.12 a share, 11 cents above estimates. Revenue topped as well. The food producers forecast full-year profit below the estimates amid rising costs and shifting consumer preferences, but the market likes how they come in. Yeah, you also had the spice maker, McCormick. People aren't using as many spices, I guess, or maybe they're just costing too much. They catch a little bit of a bid from where they were pre-market. Yeah, you were all the way down to $78.69. You're only off 2.5% right now from McCormick. Let's see. Lower than expected quarterly results, cut its full-year outlook, negative impact from factors like higher cost, supply chain issues, and unfavorable foreign currency trends. All right, we jump over to Pinterest. This thing was rocking last night to the upside. It gives it back today with the market turning south. The co-founder is stepping down as CEO. He's going to transition to a newly created post of executive chairman. He's going to be replaced by Bill Reddy, who'd been president of commerce at Google. So that the company actually liked. The image-sharing company stock was higher pre-market on that number, but just like we were talking about Kevin Hincks, folks, you got to wait until that opening bell to find out really what the market thinks about something when true supply and demand get revealed, and Pinterest gives that back up down about 0.3%. What else we got? Tesla's laying off a few people, laying off 200 workers, according to people familiar with the matter. Ongoing effort to reduce headcount and cut costs. It's been quite a fall from grace for Tesla since Elon took on other endeavors. We'll call it that. Look at this thing, man. Tesla's down $70 from where it was just yesterday. You're trading at $677. You put this thing on a weekly, I mean, you're right back to this 50% retracement line. That line, 654, you're trading at 678 right now, well off the highs of 1243 and well off the highs of 1152. Folks, remember, that is when the Twitter saga began, when Tesla was trading at 1141. Nobody else in America or the world as a CEO would ever be able to do what Elon has done. Yes, the market's traded off tremendously, okay, but it hasn't traded off from 1141 to 681 over that time, folks, okay? And somehow Elon gets away with it in terms of doing other things with his time while this company suffers. He sells shares. It's all within his right, folks. But, man, the shareholders have paid a dear price in this equity with Tesla down another 2.2% today. Let's see how ARK is trading, because they had quite a turnaround yesterday, man. Down to 41.31. We take a look at the daily on ARK. Just yesterday, you were up about 45. You're trading right now down 2.4% for ARK. Some of their equities, as we know, the most volatile. Zoom shares, I think that might be their biggest holding now, down about 2%. Still well off of the lows we had at 79, though. We jump over to Roku shares. They've caught a bid recently, but pulling back as well, down about 3.1% for Roku. He's got a position in DraftKings down there, down 3.3% for DraftKings shares. All right, folks, stay tuned. When we come back, we'll be talking a little bit of Forex. Stay tuned, folks. We'll be right back. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the markets in negative territory. We got some action in the dollar index as well. Dollar index spiking a little bit higher. We got the euro pulling back lower. You have Chairman Powell over in Portugal talking about an ECB conference. And on the front page of TFNN, folks, head on over to the front page of TFNN.com. Our man Teddy Kegstad, he has kicked off the Tiger Forex report this week with his first issue on Monday. You can subscribe to that, folks, risk-free. You get a 30-day money-back guarantee. And the best part is, for the month of July, we're running for 1 month. You can become a charter member by signing up. As Teddy has launched his report, you can lock in 25% savings for the life of your subscription, folks. It's $97 a month. Okay, you get 25% off of that number. I think it brings you down to $72.75. I got to pull the exact number out of my head. But please sign up. And the best case is you sign up, you lock in the savings. Worst case scenario, you cancel. You can get a money back guarantee for 30 days. Teddy Kegstad, good morning.
Good morning, Tommy.
Well, did we pick a good enough day to bring you on, Teddy, with the chairman talking? And we got some action in the Forex market right now as I'm looking at these charts. The euro pulling back a bit. Not sure what they're saying. Not sure if they're saying anything, but the market's reacting so far this morning. What are you looking at this morning, Teddy?
Well, everything. The dollar's been swinging all over the place today. I mean, the dollar was under pressure a lot. The U.S. dollar Swiss made new lows again today, and they were really burying the offer without a doubt, earlier today. And then all of a sudden, about a half an hour ago, we got a little bit of a bid in the U.S. dollar. The British pound started to finally move, and that's been a tough grind, for a week. I mean, if you look at the dollar index, it's been sideways, really, basically, for the past week and a half, 2 weeks, winding its coil. And I think we're starting to see we're at that friction point where these markets have to move. I mean, we have the U.S. dollar yen that just broke out to the upside this morning just a few minutes ago to make new highs. Oil is creeping higher. And I think you're going to start to see a lot of swinging again and the trends reemerge again in all those markets.
Yeah, pretty cool action we have going on. We got the 10-year this morning. What are we sitting? About 3.18% right now. What did you think of just the market pullback yesterday? I was talking to my dad yesterday, or this morning, one of them. He had a great conversation with you on Monday, and one of the things he was saying is it feels like, and we're all biased, but the Forex market right now is so important. I mean, you've given us a great education talking about our interest rates, right? How the interest rates drive the strength in a currency, because as you're getting a higher interest rate, money is going to flock to that currency. That'll maybe boost the currency action. So the U.S., ahead of the curve, higher interest rates coming at you, putting some strength into the dollar. And then we have the market yesterday pull back 150 points as we're sitting there. What do you think of the market reaction right now with the S&P having, I mean, that was just like a 3.5% move, Teddy, and the S&P's really not too huge of a reaction, but so much of what's going on right now has to do with the strength of the dollar, especially commodities. We're talking about gold, right? What happens to commodities if we eventually, we should get to the point, to get to my question, where we finally reach the point that the Fed has achieved their goal, right? We've hiked enough that hopefully they get inflation under control. I know that's a big, tall order, but eventually it should happen. And then we start to ease those numbers, and maybe Europe is behind us, and they'd start hiking. So what do you think as that relates to this market when we eventually get there, of how those rates are going to kind of play into each other with the U.S. ahead of the rest of the world right now, giving the dollar so much strength?
Well, here's the thing is when it comes to like especially central banks trying to play catch up like the ECB, they are going to start raising rates. They have to, just for multiple reasons, just to defend their currency for one. And then you have the Swiss have already done so. That's why you had that first initial pullback off of parity, So, and they're probably going to do it again, So they're ahead of the ECB. Now, the question is are they going to be as drastic? I don't think they are. I don't think they can, So, I mean, we should have done this a long time ago, So, but we have the capacity to do this, whereas they don't,
Great point.
So, and that differential is what's giving the dollar its strength. I mean, when the dollar turns, it's going to be very bad.
Yeah. Now, what do you think would happen to the gold contract? We got a lot of gold bulls out there. When we do get some dollar weakness, I imagine at some point it may ease a bit. Not sure it's going to have the fall off factor for the reasons that you stated. I agree. But what do you see happening maybe with gold if we do eventually get some pullback in dollar strength, even though the Fed late to the party? What do you think happens with gold?
I think you're going to see a monster rally in gold.
You just caught a huge fan base at TFNN. No,
yeah.
Go ahead. Yeah.
Rally. I'm not, and I don't think it'll be just a little spike. I think you're going to see like I remember when I first started like studying the markets, especially in depth and stuff, and you have these periods where you have really big booms and busts, and you've heard me say it multiple times, markets go out like they come in. I see gold having a very radical spike. Now, I don't know if it's sustainable, but I could see it easily seeing upwards of a 20 to 30% appreciation in price from where it's at right now. Easily, and very quickly as well. So especially when the dollar turns, So, I mean, I've been saying it for a long time. It's not that the dollar is strong. It's that all these other currencies are that weak.
Yes.
So and you're starting to see, there's a tension now because of all these Ukraine, sanctions on Russia. It's hitting Europe very, very hard. It's what happens if let's say that we stay where we're at right now. We don't have any break in the Russian conflict. Where's the ECB going to stand a year from now? You might be looking at a country like Germany pulling out of the EU. So I mean, why wouldn't they? Just for their own sake. You got to remember, a war started because of hyperinflation in Germany once, and after World War II, before they were part of the EU, Germany always had a platform of low unemployment, low interest rates, and absolutely low inflation. And that was they were living day by day to make sure that did not change because they knew it would spark another war,
Sure.
Well, look at what's going on right now. You have rampant inflation. Unemployment is skyrocketing in Germany, because of manufacturing plant closings, all over the place. This can't persist. It's going to cause a big problem in the EU. So I see a lot of instability in the euro coming up it's definitely over the next, not right now in the next 3 months, but about 6 months from now, it's really going to start to come to a head.
Yeah, we got a very interesting 3 months, 6 months, 12 months. I use that time frame all the time, but it is so volatile, so much economic data coming down the line, and so much volatility in terms of where the Fed goes over that period of time and where the whole globe goes.
And the economic data, which you just said, that is the big key. That's really going to be the driver of all these trends. And I have to say, I'm not Debbie Downer, but none of it looks good.
Show me a good number, Teddy, right? I mean, that indicates that we're coming out of this because, you can be a little hopeful with some of the numbers maybe pointing to future numbers telling us that. It's almost comical when you put it that way. But we're basically at peak inflation right now, and that's what you have to hear. And what's so cool about being a trader is for so long, traders were able to push that number back, say it's okay, it's going to ease in the second half of 2022 because the comps are going to be easier, right? Well, we're there, folks. And you see it. It's still high numbers, and now you get the Fed realizing it. So we're in that volatile time. And, folks, you heard what Teddy said. Even if you don't trade Forex pairs, okay, and I don't trade them a lot, sign up for Teddy's report, folks, because they shape everything we do right now. You heard the conversation about gold, okay? Teddy takes a look at oil. He takes a look at the bond in there. He takes a look at the currency pairs. Check it out on the front page of TFNN. New issues every week. And lock in the 25%. Comes with a 30-day money-back guarantee. Teddy, we appreciate the update, man. You have a great July 4th.
Thank you,
and we'll
Tommy.
talk to you after the holiday, man.
Absolutely.
Okay, enjoy.
Sounds great.
We'll be right back, folks. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the gold contract right now. You give back some of those gains. We get the gold contract flat right now at 18.20. You're trading right in the middle of that range. Great conversation with Teddy. And folks, check out his newsletter on the front page of TFNN.com. Just launched on Monday. You get instant access to the report on Monday. You get a 30-day money-back guarantee. And just enter the code TEDDY25 at checkout. You'll save 25%. And folks, we don't do these types of sales basically ever. You're becoming a charter member, okay? You're basically an inaugural member, a charter member of the Tiger Forex Report. For that, for signing up as a thank you, we're giving you 25% forever, okay? That's 25% off the monthly price forever. We don't do those types of sales, only an inaugural membership. And the best part is you risk nothing. Sign up, Get the reports, check them out. If you don't like it, worst case, 30-day money-back guarantee. And just for a quick tease, folks, okay? And this is the report Teddy put out on Monday. It is an outstanding report. You're talking about the dollar index there. He's got resistance levels. He's got support areas, bearish where it breaks through, okay? He's got light sweet crude talking about that area. His target zone, 112 to 115. Where's crude right now? Look where it was trading at when he was talking about this, folks, okay? Critical support level, 101.50. Where did crude get to? He's been calling this market, folks, dead on, okay? 101.53. All right, now that was last week. He puts it out Monday. That's the area he's looking for, but it's right in that exact area he was talking about. Short-term upside target zone, 112.86. It's trading at 113.50, folks. He's been calling it great. Check it out. Your T-bond market, he covers euro dollar, pound dollar, dollar Swiss, dollar yen. You're a gold trader. You want to know what's happening with the dollar yen, man. You heard his call on dollar. You got the Aussie dollar as well and the New Zealand dollar, and then you got the dollar Canadian as well. He'll have specific trades in there when they come about, folks. Check it out on the front page of TFNN. And don't forget, folks, because it's only this week that we are running the Tiger Dollar sale. Get some Tiger Dollars, then use them for the Tiger Forex report. Even when you use Tiger Dollars, folks, okay? It's still a 30-day money-back guarantee. You'll get those Tiger Dollars back. If you don't like it, you can use them for something else. 40% bonus is what you can get, the front page of TFNN, on your purchase. 20, 30, or 40% bonus. This one only runs this week, folks. Don't forget about it. That deal ends July 5th. All right. Thanks so much for starting your trading day with me, folks. S&P's up by 2, 38.27. Stay tuned, folks. We got our man Basil Chapman up next. Have a great Tuesday, everybody.